Good morning. Welcome to Market Day Report. I'm Tony St. James. Let's get the week rolling, and we'll start by looking at how the markets have been trading in the overnight session. Let's start with corn in the red. December, half penny lower, 405 3/4. This is after gaining 0.6 of a percentage point in trade in our holiday shortened week last week. Soybeans gained 0.2 of a percent, not major gains last week, but November 10.13.5, 8.5 cents higher in the overnight session. What about wheat? Wheat just marginally higher on the week. December, Chicago, 1/4 cent higher, 5.67 1/4. July was a 1/4 cent higher as well. Top end of the range, 603 1/4. Hard red winter wheat was mixed, 3/4 of a penny higher on the D's at 578 1/4, with July a tick lower, 601 a bushel. And spring wheat in Minneapolis saw lower trade in overnight. December, 611 1/4, off 2.5, in July at 650 1/4, down 3 1/4 cents. What about the cotton market overnight? Actually saw it move higher, with December at 68.07, up 19 points, but still 2 pennies away from 70 cents. Brian Hoops is president, Midwest Market Solutions. And Brian, we had an interesting week last week. So with that now in the rearview mirror, what do we start watching for this week?
Well, good morning, Tony. We saw soybeans move higher overnight. We had the outside reversal day in both corn and beans on Friday, and then a little follow-through selling to start the evening session, but then we rallied and closed higher. Now, part of that was anticipation that China would be back in the market, which they were this morning. 132,000 metric tons sold to China of soybeans once again, so a couple more sales. Now, they've been very slow buyers this year. It started off the marketing season with them buying virtually nothing compared to a year ago. Now they're starting to narrow that gap because they have been pretty aggressive buyers, and part of that reason is because of what's happening in South America. It's very dry, it's very warm across Brazil, and that's slowing down any thoughts about early seedings of corn and soybeans. Now they are doing some corn, but the soybean crop is probably going to be much slower than anticipated as far as getting planted. And China is hedging their bets that even though we have a big U.S. crop coming, that South American crop may not be as large. And so they're accumulating some inventory around them. And so that's why we're seeing so much soybean purchases here recently. 3 sales last week, 1 again this week, no corn purchases last week at all. So it's kind of a case here now where watch the weather here in the U.S. It's going to be pretty much wide open for most of the Midwest this week to be doing harvest. A lot of producers telling us either they were going to start on Sunday or early part of this week and really be aggressive, I think, this week in harvesting. Of course, with that hurricane or a tropical storm making landfall, it's going to bring some moisture, and some of it will be much needed. Parts of eastern Missouri where they double crop soybeans, this will get a real drink and help out that crop for its last finishing stages. But that'll slow down the harvest in a lot of areas, southern Illinois, Indiana, Kentucky areas where they've been harvesting. It's going to slow that down quite a bit.
Okay, you mentioned soybeans and the sales to China. What about new crop forward sales on corn? Has that been a bright spot for this year?
You know what? It's been okay, but probably similar to last year. The main focus was on soybeans, that it was so poor as to start the growing season, start the marketing year, and now they're starting to catch up a little bit. They're still well behind where they were a year ago, but they are making progress, and that comes because we've been aggressive here the last several weeks. So corn sales, yeah, they've been decent. Soybean sales starting to improve, and that's kind of catching the eye of the marketplace, and we can see a few cents higher in the overnight as a result.
Okay, let's talk more sales. This time we'll talk cash sales and cattle, and we'll dig into livestock with Brian Hoops. Market Day Report continues in a moment. Welcome back to Market Day Report. What about the cattle market? Where are we? Well, on Friday, we settled lower, and this was really before the cash trade just pretty much finalized on Friday. But live cattle futures 202 lower on the December at 174.70. Obviously, that October contract was lower as well, down 207 at 175.17 a hundredweight. What about the feeders on Friday? Look at that, 362 lower on the October at 230.95, and then roll out to 2025 contracts down $3.70. Hog trade on Friday was lower as well. One exception, May contract gained a nickel to 84.22, but the October at 79.50, down $1.20. And Class 3 milk futures on the October contract, 4 lower at 22.80. Milk last week gaining well over 10% on the week-over-week look at dairy. Let's bring back in Brian Hoops, Midwest Market Solutions. We went into the break talking cash, and let's talk cash cattle. We backed off, what, $1 to $2 in the South?
Yeah, it wasn't real pretty. $4 to $6 on a dress basis, $1 to $2 in the Southern Plains. So lower cash trade, and certainly a disappointment. Early in the week, the futures had rallied, anticipating that maybe we would see a little bit stronger cash trade because the cutout values were trending higher. And late in the week, we saw the big sell-off in the futures after the anthrax news that came out in Wyoming, and the cash markets kind of followed the futures lower. So disappointment in the cash trade this week and last week. Calls this week, you're talking steady to lower again. Just having a real tough time finding any positive news to push this cattle market back to the plus side. We may open a little bit firmer this morning, but it's probably going to be real choppy, real two-sided type trade. Looking for, some stability in this market, trying to find either some price level that's going to stimulate better demand or some news that could give us, some strength in the cattle market, some cash news. Because it seems like any type of news event that we get, it's negative for the cattle market, and that was the case last week with that anthrax news.
Brian, hog market lost about 3% of its value last week, but if we're looking for something positive, looking at U.S. Foods, they're a wholesaler for food distribution, and their pork trends, they say that heavy hams are coming off of 10-year highs, but the support continues into the holiday season. So I guess if we're looking for something positive to start the week, it might come in the way of pork. Brian, thanks for hanging around with us this morning. We'll see Brian back in here on Wednesday. He's also on the radio side, Commodity Wrap, on Wednesdays as well.
Right, yeah, he's always a good contributor. All right, thanks, Tony.